reporter from Yahoo. But, so Powell says, well, you know, we'll let a little run over inflation. But the follow-up question on, well, you say moderately over, but what if inflation goes to 4%? Are you going to raise rates? They don't flush anything out. Sorry, but I have to say that they don't flush anything out.
Powell's operating on a hope and a dream.
Angela and I were musing about Leisman's comments. I mean,
what? Yeah, what was just, I have? What did he say?
He was just genuflecting.
Maximum employment and inflation was his. First of all,
and Ira, that second to last or third to last question, he used his legal skills to dodge the question about the wealth gap.
Oh, yes.
We analyze it. We analyze it. We look at it. A lot of people are looking at it. Blah blah blah. But our goal is full employment. But I never answered the question. Not that he would.
Again, because they don't push him on anything. They don't push. How do they not follow up on the last question to go, well, would 4% inflation concern you? At least get him to, you can't just let him, 2% inflation, 2% inflation. If I was drinking tequila every time, a shot of tequila every time he said it today, 2%, oh, 2%. Man,
We'd be wasted.
Would I be drunk?
We'd be wasted. I don't know. Did you get the impression that he was full of contradictions today?
Oh, you know what? He is.
And I don't even know where to begin with that.
He is, as I said, the music backdrop should have been whiter shade of pale. He is not comfortable in this because he really doesn't have any answers. But again, how many times do we hear about Black and Hispanic unemployment? Now, I don't have a moral problem with that. That's right. But I just don't want them. That's what Congress is for. That is not what the Fed, they have mission creep. And you know what? I think there's, and they know it. They know it. And here's this new phrase today. The new phrase today. Well, let me step back a minute. He also said that when you take the people who've left the job force and put them, he says, I really believe they're in the job force, and that unemployment is actually 3% higher. Did you hear him say that?
Yeah. Yeah. And in his opening remarks, like in his third, fourth, or fifth sentence, I started to write it down and I lost track. He said something to the effect of, we're hoping that the unemployment rate drops before inflation picks up. Something to that effect. Did you catch that?
Yeah, well, yeah, because again, they don't pin him down. So what if inflation starts to pick up before you reach your unemployment goal?
Yeah. Yeah, I couldn't write that down fast enough.
That's the operative question.
In other words, we have no freaking idea what we're doing, but we're trying to make you people think that we do.
Yeah, that's right. That's right.
He won't matter if it's a Wednesday high, though.
Oh, look who woke up.
Oh, it's good. Good call on the dolly.
Good morning, Cleaver.
Good call on the dolly in, sir.
Yes, blind pig. What if inflation picks up before unemployment? That's it. Now, he used this phrase too, and it's in the statement. 1, 2, 3, 4, fifth paragraph. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that it could impede the attainment of the committee's goal. Now, there's no emphasis on what if things get out of line before the goal. All he's concerned about is things that impede. And he said that, he said that again too, when he, at the opening statement, impede attainment of goals. Well, what does that mean? I know it, to me, it means,
Ira, look, Powell is not a stupid guy, okay?
oh no, I'm not making that claim whatsoever.
You know, yeah. Well, no, I understand, and the reason he doesn't go there is because he doesn't want to go there because of the can of worms that opens up. He can't go there and address that issue. You know, what if unemployment's still at 6, 7, or 8, and inflation is 5, 6?
Yeah. That's my question for December. You know, going into December, what if we're at those types of levels?
Yeah, I mean, what could he possibly say?
And that's the
to
question.
justify that positioning right there. I don't know what he could say.
I'm telling you, and that's where the media. How do you not ask that question? It's the operative question. Okay, we're giving you these. We're giving you your mandates. We're giving your attainment. We want you to attain your goals. But what if this happens? Why am I not allowed to ask that question? Look at you throw out those goddamn summary economic projections again, which are absolutely worthless. Do you think I care that they go out to 2023? They can't get it right going out to December of 2020. What do I care what they project? They're meaningless.
Ira, if they allow those kinds of questions, then they specifically go to the whole issue of the Fed's credibility, and they just can't go there. I mean, let's peel away the layers to the onion and call it what it is, right?
Yeah.
It's smoke and mirrors in the hope that, you know, we can keep the natives happy and calm. Because otherwise, if we tell them the truth that we're really just smoke and mirrors, the whole thing crumbles.
Well, listen, it's my favorite chapter in literature from the brothers Karamazov, the Grand Inquisitor. That's all. That's all you have to read. You read the one chapter out of Brothers Karamazov and you understand it all because you can't escape from it. You can't. It is.
That's an awesome book. That is one of the most awesome books.
I'm sorry?
I said that is one of the most awesome books.
It is. And that chapter,
in that section of it, yeah.
Oh my God. Oh my God. How it is so great. It's scary. And how it
is.
History in real time.
And it was written, what, 1870-ish, something like that?
Yeah.
You anticipated modernity, you know.
Yeah.
All this bullshit.
Alyosha. And not Haynes and Jeremiah either. No, it is amazing. I would advise anyone just read that. You can go find it online. Go Google the Grand Inquisitor and read the chapter. It's one chapter out of Brothers Karamazov. It's phenomenal. But that's where we're at. You know, that's where we're at. And again, I hold the media accountable because how do they not, instead of getting their damn faces out there, follow up that question. And I know he's going to duck it. Angelo is 100% right. He knows how to sidestep. He's a trained lawyer and he's worked at Carlisle on top of it. So he knows how to duck things when he wants to, but at least push them because that's what needs to be pushed. We can't get away from that end of year question. What if we're at 8% unemployment and 6% annualized inflation rate? And again, you know, when they asked him, well, how long does this have? He couldn't answer that, how long. So does he let 6% run for a year as long as we're not at quote unquote full employment? And full employment now is bringing the Hispanics and the and African Americans back to the job participation rates and wage status that they were attaining prior to the onset of COVID. We know that, right? Is there anybody who would disagree with that's what their objective is?
Hope so.
No. So now we're social. We're at, they are now a social welfare agency. Social justice is really the right phrase. They are a social justice agency.
For the 1%.
With a what?
For the 1%.
Well,
Well-
inflation is that for the 1%, or who's it for?
No, they're actually going to try to harm. Actually, that's a good question. I have to think about that. I shouldn't say no so quickly.
Deadline from Dow Jones. Deutsche Bank will be giving you.
Yeah.
You guys saw what I had put up here, right? With the S&Ps and the NASDAQ.
He
They
has,
just screwed all the shorts in both of them.
he has certainly set the table, but let me tell you, beware of some type of real statement coming about a compromise. What's the name of that group that they have meeting? I like the name actually. There's
Apparently, it's a bunch of moderate Republicans and Democrats that got
Right.
together.
right who actually are working to get something done. And I go back weeks. We talked about this. I thought the number would be $1.5 trillion, and I think that's what we're going to see. And here in Illinois, I mean, yesterday, look at the. I have to watch. Looking at Kim Jong Un. Pritzker, basically in tears because the budget crisis in Illinois is deep, and it's because there's no revenue coming in. There is no revenue, and he is desperate. But here's the difference. Gavin Newsom, say what you want, he knows how to play to Trump. When you're asking somebody for a lot of money and a lot of help, you got to talk a little nice. Pritzker hasn't learned that, so all he's done is piled on, and you can hate Trump all you want, but if he's controlling the flow of money to you, I think you better get a little more congenial. How about that?
Yep. Ira, going back to the Fed's inflation target, let's say they get 2%, 2.5%, right? Maybe even 3%. At that point, if you think Americans are unhappy now, you see how unhappy they're going to be with inflation at 2.5%, 3%.
That's the book fire argument for 6 months already. Peter is out making it again. In fact, I'm doing a podcast with Peter tomorrow morning. So, you know what? In the morning, about 8 o'clock Chicago time, send me some of these points, and I'll see if I can filter them in. But Peter's been on that, going, you guys are out of your mind. Who do you think you're hurting here? And which is your point, Angelo. Who are you hurting?
Yeah. Yep.
Those who are less adept at dealing with it. Look at, whatever name she's going by today, Sandra Penn, Sandra Alexander. She got more names. I don't know. I'm starting to get suspicious. I think I saw her on The Americans. But I think, Penn, if you're making money, and I'm just having fun with Penn because she's got a good sense of humor and we can do this. But if you're making money in the stock market, you can absorb the inflation hit. If you're working at the local restaurant, and you're delivering packages out, the revenue stream is down, you can't absorb that because first of all, you're not getting unemployment anymore. You're working.
Ira, that's what you're saying. It has been my point, is that those of us that can trade will trade and make up for it. But the rest of America that is working but doesn't have any checkbook left at the end of the month, or has $1 left in their checkbook at the end of the month, that's the segment of American society that's going to have a shit fit when their food prices are up another 25%.
There are some very grave concerns there. And again, not one question about the dollar. Not one question about the dollar.
Nope.
it truly is scary. And that should have been Leisman's question, because his question was ridiculous. He was on I have it written down. Last time he asked a good question. This time, yeah, right. Judd, what did you call it?
I don't know. I thought he was genuflecting.
Yeah, he was. You know what? That's what I call an access journalist question. And again, good journalists, as my daughter Alexandra has taught me. Good journalists who really push hard, they afflict the comforted and comfort the afflicted. And you know what? They needed to afflict Mr. Powell a little bit more.
They're throwing up softballs. Who was that other girl with the glasses that was on that was asking? I mean, those questions shouldn't even have been allowed.
I know. Yeah, I'm surprised nobody asked to see if they had resolved the coin shortage yet.
Yeah, right. Where are my quarters and dimes?
Yeah.
So why isn't the bond market behaving worse, Ira?
Well, you know what? The bond market actually was interesting. I'm glad you bring that point up, Andrew, because yesterday and this morning we had some pretty flattening on the 530 especially. And now we rolled that all the way back to where it was yesterday. Because I put that on yesterday, and it's almost exactly where I put it on, and I was able to trade it pretty well. But it's telling you, I think the bonds got a little nervous. First of all, because he didn't say a damn thing about yield curve control. Not aware. Again, and not a question about it. There was questions about the purchases, but nothing directly yield curve control. I mean, seriously, you talk about inflation. Well, yield curve is a corollary to inflation, because if you get that inflation and the Fed doesn't allow it to take hold, right? Then the only way that they can keep long rates down is through yield curve control.
Yeah. So I have two questions for that. I have two questions that maybe I'll frame it around a statement as well. So he spoke on the 27th of August when he basically framed today and said, we're running this hot for as long as we ever can. And the bond market has not changed. And the markets that he's basically positioning, which is financial assets, are lower than the prices you spoke on that day. So the stock market, the Russell, the S&P, the NASDAQ are all under the 27th. And the bond market hasn't sold up at all. So all the bluster and there's not a winging around, but I'm just saying that's my only concern, that he's trying to frame it. He wants to run hot. He certainly doesn't want the stock market to go down. He wants the dollar lower. He's got one sort of working for him, the dollar. But the other two, certainly the bond market, he'll fix that with yield curve control. We know that eventually. But the stock market has been pretty heavy since he's spoken.
Oh, they're reporting that there's no Oracle. Bloomberg's breaking the story. TikTok falls short of resolving concerns of Trump administration officials. The Chinese-owned video sharing poses a risk. Okay, so, but it'll be interesting to see whatever that group is. I forget. They actually have a decent name on the moderate Republicans and Democrats who are actually trying to craft this together. So.
Hey, Andrew, I think the answer to your question about the bonds, the dollar, respecting the bonds, the dollar, and gold. Industrial production yesterday, retail sales today, while better month over month, are still slowing on a year-over-year rate of change basis. Right, and I think that's what we're seeing in the dollar.
Well, Angelo, does anybody believe those figures out of China last night where their industrial production was up and their exports are up?
Well, you know what? Here's the thing about China's numbers. It's not a matter of whether this is what I think. This is my opinion.
Okay.
China fudges the numbers, yes, but they are consistent with their fudging of the numbers. So you can record and map the rate of change of their numbers, right? Because they don't vary the degree of fudging. Does that make sense? You follow that?
It's the rate of
Yes,
change.
yes, they fudge.
It's the
Yes,
rate,
they
it's the
fudge.
rate of change. It's the rate of change of the fudging that matters.
But they're consistent in their fudging is the point.
No, I kind of get your logic. I
Main
think.
averages fading once again.
I mean, Angela, I hear your point on the terms of data in recent weeks. I guess my point I'm always asking is when he's been very clear. Sorry, I mean, you know, the fact that he came out with his statement and it's so aggressive in terms of he wants to run this hot, and the markets, in fact, today's high in the Russell, which was a fantastic matrix number from Judd as well, was the high of the 27th, which is the day he announced to the world that, you know, the Fed's gone all in. All I'm saying is I want some action above those numbers for me to believe. And at the minute, I'm still, you know, they've done well. The rally of Friday night was extremely strong. But into
there's your confirmation right there, guys. You just got the confirmation of the high on the SPOs with that 75 print. So now you can trade against that high.
Yeah.
And they got you got the stops in the NASDAQ at 33.
Jared, are you using Adizes?
Yeah. Those are those are D's pointing figures.
Okay. I thought so. When I heard you spouting out 78 or whatever earlier, I'm like, oh, he must have switched.
No, well, I wanted to roll because everybody's trading that, and I just, you know, I got you. They felt, you know, they did what they needed to do here, and now we got to see how they trade in tomorrow.
Yeah.
You know, Andrew, even Gary Schilling has done pretty in-depth reports in the past about the fudging and the consistency of the fudging of China's numbers.
I get your logic, and I kind of follow it. Yeah. I do.
Angelo, that's why for years I've looked to New Zealand and Australia as a much better proxy for what was going on, even South Korea.
Yeah, it's a good point.
Because
Taiwan, South Korea.
Because again, I'm a capitalist. I look to the margins for my profits and for my information.
I agree with that.
Just to trade for an old favorite of yours, Ira, which I went into yesterday, is gold Swiss.
Yeah, you know what? I've been dancing around with it, but
I'll just point out a couple of things on it. Seasonality is the 14th of September for the low of for the remaining part of the year. So for location, it's not bad. I think I like the action around some of the expiries as well. So I think it's interesting. I think it's got some good upside. I'm interested in your thoughts on it though.
Well, it's just a little bit higher here to break out of this oscillator, Andrew.
Yeah, sorry. Let me bring it up. Sorry, Judd, say that again, mate.
It needs just a little higher here. It needs above like 179.
Okay.
To break out of that oscillator.
Right.
To get going.
Also, take a look at a 240-minute gold yuan.
Hold on.
Yeah. Bring it up.
There it is.
I mean,
okay.
My point, there's a lot of shifting going on, and the dollar is not involved in this, by the way.
Yep.
That's my point. And, you know, there's still people talking about a dollar shortage in the last quarter. Well, if it's shown to be, I will flee from my view on the dollar. but I'm just not there yet. But if you tell me we're going into a deflationary spiral or deflationary period, then I will rethink everything.
Ira, what number in the dollar, what level would get you to start leaning that way?
I don't know. I haven't seen anything yet. I would have. I'm not going to look at the dollar index per se, because I like to think I'm a little bit. It's to be like the dollar index is like an ETF, and
Yeah.
I have to.
Yeah.
I have to look under the hood. It's like why and Andrew was nice enough to say it. Why I went bullish yen starting early last week, maybe even early before that, where I thought the yen, because of the real yield, that was my whole basis to it.
Yeah.
It had nothing to do with Abe. Although, Andrew, get your copy of the Iconoclast, please. Everybody order the Iconoclast. Come on. The kid he's got 2 little kids to take care of. He needs a little money.
So I guess you'd be saying you want the yuan and the yen and the Aussie to start showing material weakness.
Well, the Aussie has done pretty well. Now the
Aussie's done a great job considering. Although I'm hearing from the banks down here that the demand on the iron ore the last 2 months has just been off the charts.
Yeah.
The buying there has been but whatever, who cares what it is? It's done a good job.
Yep. Well, when you look at it, and here's the amazing thing, is that going, okay, so December, it closed out December at 70.17, and then you see a steep collapse in March when everything else did, of the Aussie down to 55.07 to be exact, and we got above the highs made in January, back in June. So we had talked about that. So we started getting higher on the year back in June, and now it's just been a straight race for the Aussie. And yet, if you really look at the Aussie news in a more micro fashion, the news hasn't been that great. The banks are a little shaky. They're talking about the Australians actually being in a recession for the first time in 23 years, Andrew, something of that ilk. So, and yet here the Aussie keeps pushing, but that tells
it's rolling back below the yearly stops again, Ira.
Where?
Aussie on the yearly 72.96.
Hold on.
COR, that's a yearly ORH number.
Yeah.
On the currency?
Yeah, straight Aussie.
Well, because I got it settling out at December at 70.17.
Yeah, and the high is trading 72.89 right now.
Yeah, right.
So last year's high was 72.96.
Oh, I'm sorry, I'm not on that. I'm good.
Yeah, so get on the annual. They got the stops, and now it's on the it's a funky place on the semi-annual on the cloud.
Yeah.
And now they're back below the ORLs and the S&Ps and NASDAQ on the day.
And on that job, the Kiwis closed last year with 67.50, 20 points below.
And even better, to make it all worthwhile, the 200-week moving average, which I love, is a mean reversion, comes in right here too. So you know what? You can
big
define
level
this.
Yeah. No, it's a fascinating pocket, and as you framed it in your blog, I think you sent out. I think you said the two arguments: the reflation or the deflation. And I think I've made my point that I think we might in for another deflation, then the full reflation. Well, but unless we see material dollar strength, that ain't going to happen.
Yeah, right. That's where I think Angelo sits at this point too. I'm not putting words in your mouth, am I, Angelo?
No. Speaking of banks, I didn't realize until Powell said it today that the Main Street lending facility, when he said or regarding the Main Street lending facility, when he said, you know, we want the banks to share in the risk. And then I thought to myself, Ira, social justice program. There is no way in hell the banks are going to relax their lending standards.
No.
And then have to explain themselves to the frickin' regulators.
Wait,
like
even better.
Like, can they at least all get on the same damn page?
But he was talking about how they were withholding some of that as protection against the loans that the government was financing. That's what's driving the Fed crazy.
Yeah, but that's what I mean by can they all get on the same damn page at least?
Well, first of all, the smaller banks, they have their issues, and rightfully so, by the way, because they have been abused regulatorily. The cost of regulation abused by Wall Street. Dodd-Frank.
So why don't these knuckleheads, when they wrote the CARES Act, they thought about the forbearance issues, they thought about that.
Yeah.
So why did they think in terms of, okay, let's put a clause in that says that we're going to relax our regulatory requirements on any loans related to the CARES Act?
Well, yeah, what everybody knows, as Groucho Marx says, there's no such thing as a sanity clause.
Oh boy.
Sorry. I'm old. I can quote. You quote Marx. I quote the Marx Brothers.
Oh man.
No.
It's the left hand has no clue what the right hand's doing. It doesn't want to know.
No, and you know what? And that's why the Fed just goes on its merry way and then proclaims that it has to do it because, as Chuck Schumer famously told them, they're the only game in town. But if you make yourself available to be the only game in town, you become the bitch. Sorry, it's just a fact. And you know what?
Yep.
The Fed is the economy. They've allowed the fiscal authority of Congress to be waylaid. And now, as soon as Chuck Schumer said that in 2012, what he said to Bernanke at it was in front of the Senate Finance Committee, you're the only game in town. Well, I knew that was a problem.
I mean, I knew the banks were generating fees for making PPP loans.
Oh yeah,
that we all knew, right?
Yeah.
But what I didn't realize is that the Treasury and the Fed wanted them sharing in the underwriting risk.
Yeah, interesting. They asked some questions about the banks, but nobody asked why the bank performance was so miserable. In a running bull market, the banks can't get anything going. Nothing.
All right, here I've got something for you in that regard, Ira. Banks and loan loss reserves.
Okay.
So the credit card companies, they put out a lot of data and usually provide a lot of color regarding their loan book. This time around, Bank of America was the only one that said anything about their credit card book. And Bank of America said that 57 basis points of their credit card receivables are in deferral.
Yep.
If you add back that 57 basis points, that gives you the highest delinquency number all year.
Yeah.
On Bank of America's credit card book.
That can't surprise anybody. Chris Whalen has been so good with this.
That sounds like less than what would be expected under the circumstances.
Yeah. Those become pretty big numbers, Pete. Very big.
I know,
numbers.
but
look, I'll say this again. JP Morgan has only reserved about 3.8% in loan loss reserves so far.
Okay,
but
the credit card accounts are paying 16, 18, 20% interest.
It doesn't matter. Okay, it's across the board. It's housing, it's credit cards, it's consumer loans, right?
And they've also cut everybody's credit limits.
Yeah, well, Capital One did that already,
well,
right?
So did American Express.
the CEO came right out and said, I mentioned this about a month ago, 3 weeks ago, where he came out right out and said, we don't know how many of our cardholders are unemployed.
Nope, that's right.
But going back to JP Morgan, they're at 3.8. It needs to be closer to 7 to 8.
Yeah, that's right.
Okay?
That's right.
That's where it needs to be by the time, you know, we get the running off of all of these different forbearance programs, because they're all running off at different times.
How about this? I think that if you go through the election, okay, and unemployment stays at 8.5 to 9%, or whether or not, I think that what you're talking about is going to force the Fed to purchase delinquent credit card debt.
All right, let me ask you a question then. If they do that, right?
Yes.
If they do that and they incur losses, what happens?
No, we're lending. We're not spending. I'm quoting from Powell.
Are you sure you didn't go to law school?
No, I'm quoting from Powell.
Yeah, that's Powell's statement, right?
We are lenders, not spenders.
That's the big question.
Okay, so then what is he waiting for?
Because you can buy this. Here's the Fed's going to do it, and I'm quoting Powell under 13.3 of the Federal Reserve Act. He can buy those as packaged debt. Okay, they'll package them, and the Fed will buy them and just put them on the shelf. And you know what? If they're not getting paid right away, okay, you know. But eventually, once those credit cards start to be paid, then the Fed will sell them off as, you know, basically packaged debt to all kinds of investors, and let them go.
Do they cut the interest rate when they do that, or they just leave it at 23 or 24% accruing?
They probably won't change the interest rate, but they'll have total forbearance, because I mean, what's the sense of buying them if you're going to squeeze? They're not going to go chase those people. They're just going to buy them and mothball them until the economy. Yeah, I'm sure that's what they're going to do.
That's exactly what I would think. They won't mess with them because they'll be packaged already.
Yeah,
you know, and to go back and try and change rates and everything, that's just too complicated.
They'll tell the banks, just package them, just, you know, and we'll lend you against the package loan. Yes, we know they're going to be in. They're not in default. They're just in they're delinquent. And that's a difference. So they'll say they're still performing. They're just, you know, we're offering forbearance through these difficult times, because otherwise they say we'll have to give the money anyway. So they may as well do that. They're also going to buy a shitload of muni, state and muni and county debt. They're going to. If you listen to Kim Jong-un yesterday from Springfield, Illinois, they're in desperate straits.
Hey, Ira, do you think they buy them? Do you think they would buy them from the banks, the credit card receivables? You think they'd buy them at par or at a haircut?
No, they'll buy them at par.
Yeah.
Because they'll do it under the guise of propping up making sure the banks have enough, because they're going to have to do it one way or the other anyway. So now they'll take it as an asset, just like when they took, AIG paper, they'll work this out.
Okay, guys, so the best looking chart here is the Dow against the NASDAQ.
All right, I'm going to be tail lights, as we say. Thanks.
Thank you.
Thanks.
Thank you,
a lot of good questions. Andrew, go ahead. Go have a glass of orange juice. Catch the sunrise in the morning. Hit the beach.
Well, I am looking over Sydney Harbour, ladies and gents, and it's a beautiful day.
Head over to,
29 degrees in Sydney today, Celsius.
Head over to the opera.
Yep. Down the beach.
I'd be going right over to Bondi if I were you.
Angelo, thank you.
How's the beach look?
Sydney is beautiful.
Yeah.
I mean, look, the one thing about COVID is that we normally take about 260,000 in a year. So we'll get none of that, no backpackers. So it's just Sydney Arts. Amazing.
Beautiful. And look at, you know what? So Andrew, let's end on your question, because now I'm watching the 30 years and they're down, well, they're not on their lows, they made their lows afterwards. But this will bear watching tomorrow, because
I totally agree.
We want the markets to push the Fed here.
Absolutely.
We want the market. We want the markets to challenge the Fed. We go, oh, you're creating inflation? Okay, we're going to sell the long end of the curve.
Absolutely. So,
and let's see what happens.
I totally agree. That's the mark. That's the one thing to watch.
Yep. Yeah, good. So it's a really good question, and it's a good place to leave off. All right.
Thanks.
All right, thanks, everybody.
Cheerio, you
All right,
bloke.
All right. Cheers, guys.